This is Business Now, where we spotlight the stories shaping today's markets and tomorrow's opportunities. From Uganda's financial sector, one bank reporting strong gains, to agriculture's rising export potential, to tech-driven solutions, easing school fee transactions. Plus, we look at how digital tools are transforming real estate, bringing transparency and trust to asset acquisition. Business is moving fast, and we are here to keep you ahead of the curve. Welcome to Business Now.
Great balance sheet, double-digit growth on both assets and liabilities.
Some of our neighboring countries have already gone some 20%, 30% of market share in Europe. We haven't yet gone past 5%, so we have opportunities.
But first, business news, and here are the three top stories making headlines across the globe. U.S. tariffs on imports, including a 125% tariff on Chinese goods, caused a major market sell-off. Global indices, including the Dow and S&P 500, saw sharp declines, with the Johannesburg Stock Exchange losing 9%. The World Trade Organization revised its 2025 global trade growth forecast down to just 0.2% due to escalating U.S. tariffs, with global GDP at risk of shrinking by 7% in the long run. But how could this affect African economies? Trade volumes, for example, lower global trade could affect our ability to export, especially to major partners like China, the US, and Europe. Manufacturing and agro-processing sectors linked to global supply chains could also face reduced demand, cutting jobs and output. The European Central Bank is set to lower rates for the seventh time, responding to sluggish growth and the economic impact of US tariffs. Eurozone growth slowed to just 0.2% in late 2024. What this means for Africa or Uganda, according to experts, is that the lower European rates might temporarily boost capital flows to Africa as investors seek higher returns. But this could be offset by global risk aversion. Coming up on Business Now, we speak with the Chief Executive Officer about ABSA's financial performance and how the bank is supporting small and medium enterprises, especially those in the export trade.
So those results are a true reflection of the increased business customers have had with us.
ABSA Bank Uganda has reported a robust 22% jump in profit after tax, closing the year at 178 billion shillings. According to officials, this performance was driven by a 15.1% rise in revenue, fueled by increased customer activity and credit support. Customer loans surged by 12.7% to 1.99 trillion, while deposits climbed 11.5% to 3.18 trillion shillings. But does this reflect growing customer confidence? Let's hear from the bank's chief executive, Michael Segwaya.
22%, very good. I think we have become more efficient. Our engagements with customers have meant that our credit loss ratios are also down. But more importantly, we have seen a great balance sheet double-digit growth on both assets and liabilities. That is a representation of the fact that customers continue to trust us with their money. We also continue to engage with a number of business deals and a number of sectors where we provide credit to them. And we have seen a lot of support, specifically in the SME, agricultural sector. So we are generally seeing more business come to us, and as a result, those results. We have invested in a number of digital facilities where we provide solutions in form of digi loans, custody services to ensure that we expand and provide efficiency. So those results are a true reflection of the increased business customers have had with us, and the fact that we continue to penetrate different sectors of this economy where we continue to support the growth, specifically in the SME sector, which is a key part of this economy. Yeah, I think for us, agriculture is a critical one. Recently, you did see the president talk about ensuring that all our agricultural produce is sent out, at least processed, not in raw form. So we have been very instrumental in trying to ensure that we get the manufacturing or the agro-processing going to try and ensure that we provide credit facilities. We have also ensured that for the farmer or the exporter of these agricultural commodities, they are assured of a specific rate, especially in seasons where rates fluctuate. You want to hedge yourself with a bank like ABSA such that you are assured of a specific rate in the future, especially if you have guaranteed the importer across of your produce. So we have worked in those sectors to try and ensure that we provide those solutions. So trade has also been very critical. We have opened up channels in London, in the US, in China. South Africa is very important, and we are trying to see that we facilitate all these customers that are trading between these countries to ensure that the banking system works for them. And that's something that we have seen and we shall continue to support. We need to ride our customers with the season they are going through. You're all aware the executive orders from the US have an impact on us. We need to ride this tide with our customers to try and ensure that we support them. We've seen some of them have lost jobs, but we work with our insurance partners to ensure that we facilitate that season between now and the next job. So that is what we are partnering with. We do believe that their story matters, and that's why we're trying to ensure that at each touch point we are working together. So for us, it's increased touch points, increased engagements with our customers, that we should be able to serve them better at their point of convenience, but also ensure that we have the balance sheet. And that becomes very critical in this day and age, that even as we're providing that balance sheet, we can support the level of business that is coming through, but also most importantly, we provide the complexity the world is getting into, such that whether it's the trade instruments, we should be able to provide those and sustain their trade or business across the world. So we are looking forward to more partnership with our customers. I should say thank you very much. A great 2024. Let's continue working together, ensuring that we serve you, because your story really matters.
Exporters say Uganda's farmers are missing out on dollar earnings due to post-harvest losses. But what exactly are post-harvest losses? And what produce grades are acceptable in key export markets?
Lately, there's a lot of interference by the exotic varieties. Now, when you talk about the production sustainability, there is a little bit of seasonalities in Uganda. So we have a lot of production in seasons where there is a lot of climate, the climatic conditions are favoring, and then we have sometimes of the product scarcity during dry seasons. Reason being, the irrigation model has not been properly adapted fully, especially by farmers on upland production. Some of our neighboring countries have already gone some 20%, 30% of market share in Europe. We haven't yet gone past 5%, so we have opportunities. But above all, farmers should be supported. Some of our neighboring countries have already gone some 20%, 30% of market share in Europe. We haven't yet gone past 5%, so we have opportunities. The reason why the farmers are not benefiting is the cost-benefit analysis. The benefit per unit area. There's a lot of post-harvest losses. A farmer will deliver 100 kilos of this, 100 kilos of this, and then you realize that they have pests. They have been affected by pests.
Okay.
They have been affected by diseases and trauma.
And so this is not going into the box.
This is not going into the box. We only pay for what we export, unfortunately. So what we don't export, we agree with the farmer. Yeah, up to 40% of post-harvest losses the farmers incur. Farmers are finding problems with post-harvest handling, loss of shelf life because of poor infrastructure by the exporters. as you bring your produce. Most exporters don't have cold rooms. They don't have cold trucks. So we need an improvement in this area entirely and urgently. Then we should combine it immediately with improved production, because I can see all NGOs and government programs are supporting production, but they are not supporting the market sustainability. We are the market. We are the ones. So we need infrastructural support so that we can be able to accommodate. We need to be certified. We need to have confidence from our clients, from the market. We are the ones that represent the face of this country. I need to have certifications, the process certifications, the HACCP. I need to have Global Gap. So when we have these certifications, then our farmers will enjoy the fast-moving and reliable market. And affordable finances is number 3 in terms of ranking. Affordable finance, we need support. We need support in these areas, more support and genuine support at a good percentage, so that we are able to sustain the market here.
You may have come across the central bank regulated fintech firm Fincom, operating under the name School Pay, backed by major telecom companies. The platform has moved over 7 trillion shillings into school bank accounts across the country. Now, Fincom is leveraging the African Continental Free Trade Area to expand its growth into regional markets across the continent.
Yeah, we currently serve more than 14,000 schools that are relying on this, in excess of 8 million students. So all the parents are now paying school fees digitally from across wherever you are. So the solution is available. We have schools where they don't even have internet connection, but for as long as they have. So how they're using it is that we go to the different schools and capture their learner information and then load it to the School Pay solution. So then we issue unique numbers. The same way you have a phone number or you have a meter number for your electricity, each student is uniquely identified. So with that number, I am then able to, dial *165 or 185 hash, and the School Pay option is there, and then I make a fees payment. So currently, if you look at how much money is moving in the education space, in school fees and school fees related expenses, you're looking at about 7 trillion. So in the last year, the last academic year, we processed transactions up to 4 trillion. So we are seeing a very huge growth in people relying on technology to process a transaction, or for schools to receive transactions. So School Pay, we started out in Uganda, and much of the traffic has been in Uganda, but we have now grown to serve other markets in Africa. Our focus currently is Pan-African, so we are serving now in Tanzania, Kenya, we are serving in Zambia, we are serving in Ethiopia. We have recently opened up, last year we opened up in South Sudan, and we are opening up in Malawi, and we see different kinds of behavior. There are some markets where it's heavily mobile money, but for example, I think about 2 months ago we went to Nigeria trying to start up, and you see that Nigeria, the market is more of apps and maybe card payments and some bit of mobile money. The biggest problem that we saw was that schools were heavily relying on paper-based systems. It is heavily manual, that if I am not in the school and I'm the school leader, I'll miss out on insights or information. So then we improved the School Pay MIS that we are providing into now a fully fledged ERP suite that now allows me to monitor school operations, not just financial, but also attendance, tracking attendance of learners, accounting. If I want to get reports around the performance, financial performance of the school, I can now do that. This platform is web-based, so you can access it even when you are out of the country, or you're not in the school premises. So the school, but also along the way, we've seen that parents and students need a platform where they can actually transact. So we have now developed what we call a school pay wallet, which is I am a parent and I need to send pocket money to my son or my daughter. I no longer need to go through the head teacher or send to the bus. I was sent to a teacher, sent to a warden. So with the help of the school pay system, because we issue unique identifiers to each learner, so that unique identifier, following our acquisition of the Bank of Uganda license, we are now able to create a closed loop wallet which allows the parent to send money to the learner directly into their wallet, and the learner is able to access that via a card. So we have issued, think of it as a prepaid card, but only used in the school environment.
The Real Estate Institute of West Africa, in partnership with Malaysian tech firms, has launched a new digital analytics platform called Data Pulse. The platform aims to reduce tax losses from property sales, lock out speculators, and make property acquisition even more transparent and accessible for all Ugandans. We attended the launch, and Nicholas Arinito is the Institute's team lead. He shared how this innovation is set to transform the sector.
Yeah, government must have been losing more than 500 billion because it is not using this data analytics. For a reason that there are many people, for example, who don't pay taxes. There are some properties which are not captured. There are transactions which are not captured. Someone buys a property today, he sells it to someone who does not register. The other one doesn't register. Like 3 stages, 4 stages without registering, and in between, the government is losing money. So with this kind of innovation, government will be gaining a lot to recover from what it has been losing, between 500 and 1 trillion. First of all, it is going to create seamless and transparent operations, in that this exaggeration of prices is going to reduce. Meaning that people who have been not able to buy some properties because they are expensive, we shall have price stability. Price stability, because everyone will be informed of how much a property sells. You will be knowing at least property price movements. You cannot be cheated because you are informed. And we are going to make this public. Whoever can afford will be connected. More especially, the agents will get the preferential treatment, so that you can easily get information you want that is related to real estate, whether it is a mortgage, whether it is writing an agreement, whether it is transferring a property, whether it is a search, whether it is any price, for example. And therefore, the data that we shall be using is going to be helpful, first of all, in creating transparency amongst our practitioners. It will help in eliminating corruption, because we shall be having information that comes direct from the source, not via the people that have been cheating us. Secondly, it will help investors to make informed decisions when they are to invest in real estate. And the government will have a chance of knowing how to collect taxes, because everything will be easy to click and get. Thirdly, the practitioners like real estate agents, it will help us in areas of making searches, in areas of getting customers, buyers and sellers. And when it comes into practice, transactions will be very, very easy and smooth, and there will be a lot of transparency, and it will be timely. So we want to welcome our partners from Singapore who are going to be helping us via the company PropTech and PropPulse, because here we shall be getting whatever we want in order to have a transparent industry.
And while we were preparing for Easter holidays, the Ugandan shilling stabilized between 3,660 and 3,675 after recovering from last week's dip as the central bank intervened to boost reserves. Bond yields held steady amid a heavily under-allocated auction, and regionally, the Kenyan shilling remained under pressure, nearly 129.90 cents, weighed by dollar demand and fiscal uncertainty. So global markets are digesting fresh US tariffs, as you know, weaker Eurozone rates, and oil prices spiking, while gold pulled back from the record highs after a profit-taking wave. As we pack to go for a long Easter holiday, trading on the Uganda Securities Exchange saw 2 listed equities in action, with 4 gainers and 4 losers. Jubilee Holdings led the pack with a 5% gain, while KCB Group fell 4.04% despite some positive movement in the local stocks. Now, the benchmark all-share index slipped by 0.67%, posting a weekly loss of 1%. So the local company index also edged up slightly, maintaining a strong year-to-date gain of over 14%. So that's it for this Easter edition of Business Now. Thank you for watching and spending your Monday evening with us. We'll be back next week, same time, Monday, 8:30 p.m. with more insights, market updates, and business stories that matter. From us all here at Business Now and NTV Uganda, have a safe and joyful Easter season. Don't forget to follow us on NTV Uganda and all our social media platforms for more updates and exclusive content. Good night.